Hi subscribers and welcome back to the channel. Today we're going to be diving straight into something we hear a lot thrown about the industry. Defined benefit pension transfer values are rocketing. Okay, my name's Dominic James Murray. I've been transferring pensions for over 10 years now and I hope you enjoy the content. So guys, why are we discussing this today? So people often come through and say, I've heard DB pension transfer valuations are rocketing. I wouldn't necessarily say this is true anymore. I think we've actually reached a peak of final salary pension transfer, cash equivalent transfer values, a CETV as known in the industry. The reason for this is that interest rates cannot get any lower effectively in the United Kingdom at the moment. We're still coming out of the recession from 2008, 2009. The government has still had the economy, trying to stimulate the economy by stopping people saving and spending their money by having interest rates as low as possible. Effectively, if you get nothing on your savings, the government hopes that you go and spend that money instead. So how could CETV values continue to rocket up when interest rates are already at an all-time low or artificial low to try and stimulate the economy? At the time of writing, the Bank of England has gone up to 25 basis points now. If that goes up to 0.5 or 1%, CETV values will be dramatically affected in a negative way. There is a negative correlation between CET values and inflation rates. This is obviously to do with gilt rates, etc., much of which you can read online and I'm not going to bore you with here. But effectively, all you need to remember is if interest rates in the UK rise, your CET will almost certainly go down. Now, there could be a few factors which affect that. The interest rates in the UK could go up and your CETV might not go down. Maybe this is because your CETV is higher than it maybe should be on average. Maybe your scheme in the UK is looking at the pension scheme and saying, geez, we've got way too many DB liabilities. I would like to remove some of these liabilities off our balance sheet by paying people off now rather than having to pay them when they're 70, 80, 90, 100. So that's a couple of things that could change. And obviously you have market volatility as well, which could change the value of the underlying assets inside your DB scheme. So a short video today, but in summary, I would say that the idea that they're going to continue rocketing over the course of the next 5 to 10 years is not true. We'll see in 1 or 2 or 3 years time, but I think now where we are now is a sweet spot. December 2021, we saw some very nice valuations come through and the multiples of those schemes were very high. So I think it's safe to say if you're thinking about a DB pension transfer, you're asking about final salary advice, get your skates on. Get your CETV from your seeding scheme as fast as possible. Obviously, I would say that, so then you can come and work with me and we can make money, but that is generally what's happening in the marketplace. You also have to factor in that DB pension transfers might not be here. They are in the firing line from the FCA for the past 12, 24, 36 months. As long as I can remember in giving this advice, it's got more and more complicated. My admin team on a weekly basis is basically retraining staff per week. New forms, new documents, new standard operating procedures. Now we have additional form, now we have an additional that. It could well be in 2 or 3 years time, DB pension transfers are completely banned. That could happen. Obviously people have a statutory right to transfer their pensions. That has also come under fire in December 2021 with any red or amber flags being raised means your statutory right to transfer your pension can be lost. When we add into this, one of my favorite topics, if you've watched any of my videos, one thing to add into this is the DB schemes themselves. What's their outlook on it? Are they enjoying paying out hundreds of millions per year to people who are transferring away from their scheme? Were they expecting to pay you at age 50, 52, 55, 57? No. They're expecting to keep that asset and grow it and provide you for a retirement over the course of time. So many DB schemes are currently lobbying the UK government to make pension legislation a little bit more difficult for people to obviously transfer out. So I would say if you're going to be doing a transfer, you're considering it, get going, start working on it now, and obviously we can go from there. We look forward to speaking with you. Get yourself booked in. As said, we have a free initial DB consultation. For our clients in the UK, we also provide a free abridged advice report as part of your process. This effectively means we will review your CETV and your situation. If at an early stage it seems completely obvious to us that you shouldn't transfer, we will not charge you for that advice. We will write you a report saying we really don't think it's in your best interest. We don't advise you to proceed to full advice. The reason for this is we're not monsters. We don't want to be charging people thousands of pounds if we can see straight away without really doing very much work that we think it's probably going to be a no for you. Guys, I hope you found that valuable. But get yourself booked in Calendly below. Use my WhatsApp as well to have a quick chat if you want. I'm very responsive. You might get a few voice notes back from me rather than typing, as obviously a little bit busy. But yeah, look forward to speaking with you soon. And as always, hit the big red subscribe button below to find out more information from our channel on a weekly basis. Thank you guys.